The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m., 877-927-6648. Love to take your calls. The E-mini is up 12 at 26.14. Broke out of the resistance line. It's in a leg C in the Chapman wave that says there should still be a D to come. Very, very strong action. The MACD finally crossed positive late yesterday, and the stochastic strong now at 92%. Weekly chart is still very strong, and the 120-minute chart just broke out. This is a brand new A, or is it an E? I don't know. These spirals to the upside after concluding the way they should, with the MACD lower and the stochastic lower, with a big spike. I'm just have no choice. I have to put an E/A, and the market will tell me at this point extremely strong at 26.14. It says that the 26.09 to 26.07 should be, if there's any sudden news-related reversal, that would be the key support level. Let's get out of this, and we're going to show you something very interesting here. Within the context of the markets, what I was looking at yesterday for my subscribers to my opening call, that's my daily newsletter, very comprehensive newsletter. What I was saying is we were right here. So if you're looking at this chart, this is the 120-minute Dow chart. If you're looking at this one on the left, it's the 120-minute Dow chart. We were right there yesterday, right, those three little candles having made a peak C. Now, it was very interesting because in my overview section where I have I love to call them the 5 quadrants, I had something a little different because for some reason, because of the way it's calculated by the way the program opens, I guess, at whatever time it is, this 120-minute Dow chart had made a leg and then a peak D yesterday, but it was only a C in all my other Dow charts. So I took it that probably these things have a way of resolving. I don't know what it is, and those who have done Chapman wave methodology for years know that at some point, for whatever reason, even though there's a question, very often within a bar or two, you've got the answer. So here's the answer. Smack, we spike to the upside, which I said if we move quickly above 23,638 in the Dow and hold there at 11, if we are holding there all the way through 10 past 11 this morning, that's Eastern time, that would be a big positive. And what happened was, the market just went right through there and then had another strong candle. Actually, it was just holding steady, and then suddenly the last 40 points in the Dow, 40 to 50 points, just was a real quick. I haven't even been listening to the news. Must be news related. However, what we've got now is we've gone to a leg D. Now we've got the Chapman Wave 5, and it's a methodology that I've developed. I'll be discussing some of this, not all of it, but this is a technique that I discovered quite some time ago as I was trying to figure out Elliott wave, which has so many variations to rules. I don't like that. I like to make it as simple as possible. The only variation I have is there could be an alternative count, and if the alternative count, I always favor the most conservative with the other one ready, so that you have a way of gauging whether you're right or wrong very quickly. So now what happens is, in the 120-minute chart, we've spiked to this leg D. Now it's a D. Could be an E. Doesn't matter. As long as it's a D or higher, that's good. This candle here in the 120-minute chart, powerful candle. Look, this one has the same chart, except this one has the MACD. This is the moving average convergence divergence. Really strong. Just it almost crossed negative, and boom, to the upside. There's a soft W formation in the stochastic. It's still only at 76%. I much prefer to see it over 80%. So this is still an expanding formation. And here we've got our leg C in the daily. MACD still has not crossed over. And this is going to be very interesting. We might find that we get to the D and suddenly there's a news related. This might even turn out to be a sell the news situation, because Thursday, I think, or the end of the week is where the tax bill is going to be, at least in this phase, it's going to be voted on. And what's really interesting is that the stochastic in the daily chart is at 85%. That's very good. And look at this one here, huge spike up, and this is Chapman wave 3, so they should still coincide with leg C, and there should still be some kind of a, I can get rid of this, that was in case this is going to stall. You always want to be ready with your chart formations. So these chart formations and this particular technique, it's the reason why we've been long. We've been long for about 4 or 5 days, and 4 days maybe. And what we're looking at here is it's a nice breakout to the upside. So for subscribers who have been long since 22,290s, this is an add-on position. And we did have a short position just the other day for this big pullback. And obviously that big spike up took us out. So we then switched to the long side. Now, what's really interesting about this is that I'm going to be focusing on what happens in this kind of formation where the price moves up, MACD takes its time reversing up. When it crosses over, what happens? What happens if it deflects lower? And this is what I'm going to be discussing in a webinar that I've got coming up right here. The Chapman Wave Master Trader Series. This is it's under the series of the Master Trader. Why? Because we want to be much more comprehensive in the education for both subscribers as well as for the TFNN listeners and viewers. This is really important because for me, I love doing these things. And of course, I've got my CD introducing the Chapman Wave methodology. You will get that free. I mean, there are a whole bunch of things that we're giving away with this, plus the Tiger Dollars. I mean, you could really get this entire day session, December the 8th, Friday, from 9 o'clock until 4:30. I'll probably go a little later. I'll probably go until 5 because we want to discuss what we want you to do, what I want you to do in practicing. We're going to be practicing these formations throughout the day. We're going to be looking at them. We're going to be studying them. Sometimes people trade them. I prefer if you don't trade it because you'll have plenty of time to trade it. This is an educational thing, and I find that when you're trading it, you're patting yourself on the back or focusing on something else. You don't really focus enough. So we'll be doing it live. That's why I want live. Otherwise I could have taken a Saturday. I want it live. I want to be doing it in real time. I mean, have a look at this chart right here. This is the chart of the E-mini live. This is the 10-minute, what I notated. Here last night, I notated the arch formation. This is without a MACD or stochastic. This is just with the Chapman Wave arch or V-shaped pattern, or the cup, or the cup or V-shaped pattern of the arch or inverted V. And in this particular instance, look at this left side to the fulcrum right here. You're going to learn how to choose the fulcrum. This is the plumb line. Look at that. You went almost to the penny in the E-mini at a peak D right there. Then it went a cup and not a cup. It looks like a cup and handle. It's a kind of a cup handle, but it's really more like a Chapman Wave cup and ladle formation. That's my own invention. And look at this spectacular move to the upside. And this is the E-mini. But this 10-minute chart could be very well the Dow chart. It could be the weekly chart. It could be the monthly chart. And that's what we're going to be discussing. Time frames, patterns, all sorts of things like that. Dow's up 147 at 23,728. S&P's up 14 at 2616. The comp index is up 19, lagging a little bit at 68.97. The VIX is down to 9.76. I'll be right back. Basil Chapman, Tiger Technicians out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be hosting a full-day Master Trader class Friday, December 8th from 9 a.m. until 4:30 p.m. This live 7.5-hour online class will teach you the complete concepts of Basil's Chapman Wave trading methodology, along with a variety of indicators and charting patterns that Basil uses on a daily basis, including the concept of higher peaks and lower troughs, the importance of the peak D, buy and sell modes, sustaining rallies and declines, MACD, stochastic, moving averages, on-balance volume, and much more. Everyone that attends will also receive Basil's CD book introducing the Chapman Wave methodology, a $249 value, along with 1 month of his daily trading newsletter, The Opening Call, a $128 value. Basil will be using live charts where and when possible in the webinar to show the concepts of his trading methodology, which works on all time frames. For all the details and to reserve your spot today, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians out. Dow's up 140, S&P's up 14.5. Let's continue here. So we're looking at, I'm going to go to, I just want you to do the SMH just to show you there's a little bit of a lag here. It's down a little bit. Now it's up 17 cents at 104.31. It's under the twice hit 105.83 all-time high, 2 consecutive days. Maybe a 2-bar reversal. Look, the MACD is negative. The stochastic's at 83%. It's almost negative, but it's okay. And look, you've come back from a peak D. That's how important these Ds are. And what we're really going to be looking at, another D/C in the weekly chart and a leg D in the market vector semiconductor ETF monthly chart. Very important. These are all techniques that I'll be discussing. How do you, what's the importance of the 9-period exponential moving average? I'm going to say that this is for people who've kind of got some of the Chapman Wave methodology. They don't quite, they understand it when I talk about it, but they can't create it themselves. Or it's for people who are already quite advanced, because I'm going to mix it up between the old and the new, but there are always new things that I talk about in any of these workshops. But what's really important is that I want to answer your questions. I want you to be able to take a blank chart and just, let's see, a blank chart. Let me see if I can even find a blank chart. Almost a blank chart. Just a blank chart and see what you can put in. For instance, just a visual, grabbing this chart right here, I would have said these two parameters are right here. It's actually what I did say to myself. Right here, right there. That's very important. There are your boundary levels. Just quite easy. You go from there to there very quickly. It's like not a straight line down. It's almost like a lightning bolt, that A to B equals C to D type thing. But it goes straight down, and that says, hey, that's your boundary area. But within that, you can still make another little boundary area right here, going to that peak C right there. So those are all. I'm going to make it as simple as possible. You can come in knowing nothing and I'll be teaching you. But you will receive my CD introducing the Chapman Wave methodology. I hope you can get it beforehand, because that's really important. Don't forget, you've also got the Tiger Dollars going on right now. Fantastic, 25%, basically a bonus of 25%. A lot of things going on that really favor a workshop at this time, getting you ready for 2018. I'm really excited about it. I'm looking forward to it. So hope to see you there. Friday the 8th, 9 o'clock till 4:30, probably until 5. And I might even start a little earlier than 9. As soon as I got everybody together, I'll just tell you exactly when we're going to start. So update on the tennis group. I'll do that. Just remind me again a little later on. I do want to finish these things. So I had said that we got to gold. Gold was up a point. It's holding very nicely. Holding very nicely is really not the issue here, because the weekly chart needs to see 13, 18, 13, 20, and it needs to see it quite quickly. Otherwise, I've just got that same rectangle. Look, I would just draw this in right now and say, hey, very clear borders we've got right here. You could be making a cup formation. I've already drawn it in. But look at that resistance. And the monthly chart it's really nothing to write home about. It's really a very ordinary chart. Look at this. Oh, that was a weekly. Here's the, look at this. The monthly chart is good. Holding the 9-period moving average is certainly not great. But wait a minute. Silver, the question came up. What about silver? Well, silver has been just stuck. In fact, it's down 19 cents at 16.92. Silver's telling me that gold can't go by itself. You know, it's like when I talk about the generals. We used to have so many generals in the Dow. There was General Foods, I think it was. General Motors, General Electric. Now we've just got General Electric, and even General Electric's kind of the old school. So you can't have the generals leading without the soldiers, and you can't have the soldiers without the generals. You want them in unison, and that's why we need to look at the IWM. And the IWM was leading earlier this year. Then it started to fail back in October. In fact, it did nothing. It just kept coming down gently, and then boom. You had those 3 spectacular days going into the high at 151.77 back on the 22nd of November, stalled a little bit, still trying to find strength, because there's just a chance that you're getting a Chapman Wave squash formation between the MACD and the stochastic. I need to put that down here. This is my yeah, let me just write that down, because it's it's going to be a very important ingredient going into the coming year. Chapman Wave squash. That's between the MACD and the stochastic. That's the reason why I put the MACD on top and the stochastic below. I love to see this pattern where the stochastic soars really quickly with the price, skyrockets, and it goes way over 80%, and the MACD then makes a very wide, I think it's the theta or the beta. I've got to figure out which one it is. It is the distance between the 9-period differential, the green fast-moving average, and the slower red one. So I like to see the width expand sharply. And that's like when you've got turbocharged. So what you've got is torque, and then you need momentum. But if you don't have momentum, you can only go so far. But if you can get the torque to break out and get you 0 to 60 in a few seconds, and then you start kicking in with the higher gears, that says that if at some point, even if this goes to a leg B today at 151.78, that says that you've now got in the IWM, you've got the potential, if that trend line in the weekly chart can be taken out, preferably this week at 152.70, somewhere around there, about a point higher, that's just going to say not only have you got the torque going to the momentum in the MACD, now you've turbocharged it because you've got the Chapman Wave squash. And that says you can go quickly to A, to B, to C. Then you usually stall, the stochastic pulls back a bit, the MACD has to continue the power. All right, enough with that. Let's go to the dollar. The dollar was trying to rally. It's actually up quite nicely here. It's up 21 cents at 93.13. I showed this to my subscribers to my opening call this morning. Very comprehensive newsletter. The arch formations, what we're going to be discussing. You've got your left side, right side price time match, and it broke out about a day or two early, and it went upside. And that says the stochastic at 12% has to get over 16% and then 20% to sustain a move in the dollar, and the dollar has to go above 93.50. 93.45 is the 9-period moving average to even think of getting that MACD to improve, because it's really not looking very good, and that makes the weekly chart suspect. A lot needs to happen. I want to see by Friday or Monday of next week, without breaking below 92.30, I want to see 93.60, somewhere around there. That'll be very good action. All right, let's get to the EUR USD. This is the euro-dollar currency pair. Peak C at 1.878, down just a tad. MACD is good. Stochastics at 90%. I think it will make a slightly higher high above 1.9. 1.196, and it's improving the weekly chart quite a lot. That's going to put pressure on the dollar. We'll see what happens here. USD/JPY, that is the yen, the dollar yen. This is trying to do what the dollar did, but it's not nearly as strong. Hasn't been as strong all the time. It did lead us in the very beginning of that 8th of September low that I used as a kickoff point to buy for subscribers to buy the dollar, but then it just stalled. And that stalling action is like silver and gold. So for me, the yen and the dollar they got to be in unison. If they aren't, dollar's not going to go very far. High-grade copper, we're going to look at high-grade copper. Whoa, big pullback. I discussed this yesterday. I said it's holding okay, but how it holds the 9-period moving average of 3.11 is going to be important. It's at 3.10. This is going to be an important thing. But look at the TLT. As we go out, we won't be looking at that. No time. It's up. Oh, it's going to go to the leg C. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So the TLT's at 127.30. Needs to get to 127.30 to start leg C. I think it's going to do that. Remember, I discussed this a long time ago, that there should be a rally in bonds. But, and this is really important, my thinking was that the money would come out of stocks and go into bonds if there was any nervousness. I'm not sure that that's the case. What I am looking at is bonds are acting extremely well. They haven't broken out to the 130 area, which would be start the leg D in the weekly and the monthly chart. But boy, the TLT is acting extremely well. Now, before we went away for the break, for the Thanksgiving break, I had said, please email me if anyone has conversations at the Thanksgiving table, just wherever it is, with friends or family or whatever, about the stock market. But let them bring it up first. Don't provoke the conversation. I understand that for months and months, people have been saying to me, what the heck is going on? Why is the market going up? That's what they've been saying. But no one discussed the stock market. Where I was, there must have been 25, 28, I don't know how many people. Well, there were a lot of kids as well. But no one, there was some discussion about Bitcoin, and it was more kind of a question other than anyone actually owning it. Someone had bought some. So anyone, even in the den, anyone? Nope, no discussion of stocks there. It'd be just, is it all Trump Basil, the market? You don't believe me, just ask him. I know, that's what I'm saying. That's when it finally comes down, this is going to be Trump's baby as well. So in the meantime, all I can say is this is really, it's very unusual. I've never seen all-time, in all the history that I've been in the stock market or been aware of the market, I don't ever recall new highs being made without some discussion just amongst the usual buyers of stocks. It's just an incredible phenomenon. Okay, so let's go on here. Dow's up 154 now. The S&P's up 1621. What I did want to just mention here is, so within the techniques that we're going to be studying in a Friday week in my all-day webinar, I'm trying to plan it as carefully as possible to go through it from its core and to go to the more advanced level. But don't think in one day you're going to be able to get all the techniques. I'm going to be discussing just core techniques. What are they? Look, let me just go to this. I've been starting to prepare this. Let me go here. All right, we're going to look at, so we've got patterns so the patterns to be discussed. 3 basic formations always unfold. A cup or a V shape, arch or inverted V, so that's 1, it's already 1A, 1B, 2A, 2B, and straight line moves. We just saw a straight line move. That was that big spike that went about 50 points higher in the Dow. Then it stalls, and then it does other things. Time sequences, the left side, right side, this is the Chapman Wave price time match. Remember, this is what we look at. I show this for all my different charts. If I can go to it right there. Look, let me see what I can go to here. Yeah, so let me just go to the latest, not our latest buy, one of our latest buys, just a few, back on the 17th, just what is it, just over a week ago, maybe 2 weeks ago, we bought Carbonite, CARB. And we bought it just about here at 22.80. It's trading at 24.90, up 2 points already. But we were looking for the MACD to cross positive, the stochastic to move higher. We were looking for the 9-period moving average to act as support, and we were looking for it to go to at least the D. It's done that really quickly. But now there's another technique that I want to discuss, and that is when you have this long wick, if you go halfway into the wick and you actually trade there for, it depends on the time frame. In this case, it's a daily. So I would say maybe 2 120-minute bars over the period of the day, maybe 3 60-minute bars. If it's holding there, there's a really good chance it's going to make an attempt to try to get to the high. If it fails, be ready, because then it's going to come down and test some support. These are all techniques that we will discuss. Look, we had this with General Motors way back. I drew in the pattern. Look, there it is. In the weekly chart, we've had GM now for ages. We've had GE since July, first week, from the 3rd of July. We were looking at June, July. So we're going all the way back here. So we were looking at patterns. We looked at the cup formation. We looked at the way the MACD was turning up and the stochastic was starting to rally towards 80%. Then what happens is we learn that you can take a pattern and move it from one time frame, the daily time frame, to the weekly time frame. And here's the larger Chapman wave cup and ladle. What is the difference between Chapman wave cup and ladle and, say, Investors Business Daily cup and handle? A ladle says in a peak, in a leg C or D, usually it could even be a B, you break out the left side high, in this case today 55 from back the week of the 10th of May, you break that cup formation, preferably in a left side, right side price time frame match. That means I'm either choosing the plumb line at the bottom or I'm choosing a particular candle to measure my side from the left side to the right side. You take that out sharply, and what happens is it just spirals to the upside, and it should go to a D, at least a D, but it could go even to, like it did here, to an E. So it goes to peak here, 30, let's see where it goes, right here. 46.76 on the 24th of October, makes an arch formation, tests it successfully in a shorter period of time, and now it's rallying, and it should, GM should, make a move above 45.08, and we've added a second position to it. So these are techniques that we'll be discussing. It doesn't matter whether it's this one here, whether we're looking at the MACD and stochastic in the 10-minute chart, or you're looking at a 5-minute chart. Do I have a 5-minute chart here? 5-minute chart. It's all the same thing. Where'd this one go? I think this is the one. I hope I've got it notated. Yeah, so it makes an F, and then it starts a brand new A, B, C. So this is what we're looking at. These are the techniques. So all of this is going to be discussed in great detail a week from Friday. And I'm going to teach you about channel lines. I'm going to teach you about Chapman wave inside track, how it goes to a certain level and it gets repelled. A bunch of stuff that easy things. You don't always have to know the notation. You just have to know the patterns, and that's what we're going to be. I'm going to show you a pattern. Say, what do you see? Do you see that? Do you see that? Let's draw the lines. Did you get that? I'm going to say, okay, here's a pattern. You do it, and then I do it again, and you say, what did you get wrong? Let's go through why you missed it. It's in great detail. Not only that, I want to follow you up. Not only that, you get a month of my newsletter, the opening call. You get that for a month. Included. If you are already a subscriber, it's added to your subscription. So I'm really looking forward to it. I haven't done one for a little while like this, an all-day session. Now, let's go through a couple of things. I wanted to show you that, I had a question. We've got Ari from Arcadia. Ari, hi Ari, how are you?
I'm doing very well, Basil.
Oops, it's a little fuzzy. Can you speak up a little bit?
I sure can.
Okay, I've got you. So we've got a break. You wanted to look at?
FNV.
Okay, I'll be right back with you. If you can hold on, I'll be right back. Basil Chapman, we'll be looking at FNV, which is Franco-Nevada call in a leg F. Oh, okay. We'll be right back with Ari from Arcadia, and the Dow is up 150.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wham! Wow. Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back, and we're back with Ari and Arcady. We're looking at FNV. This is Franco Nevada Corporation, and it's in the mining area, and what we're looking at is it's up 6 cents at 85.43. So, Ari, the last time we looked at it, you remember I said that it's got exactly what I was talking about a little bit a few minutes ago about in the Chapman wave methodology. We've got the cup formation, and what we like to do is we like to look at, is there a chance to get back to the previous high or low that we were in the same time frame, in a cup or an arch formation. And remember, this one had that cup formation, and I said I'm using the high that was made back on the 8th of September at 85.03. It made its high the day the dollar made its low, except this is now retesting and breaking its previous high. But I used the high that was made on the 13th of October down at 81.60 as the plumb line. And what happened was it went to a peak D, couldn't make it above that, what did I say it was, 85.03 level. And then 2 days before that left side, right side price time match kicked in, it went a little bit above. It went to 85.67, pulled back under it. It's been under it for now quite a while. And then yesterday and today, it popped to the upside. The MACD is kind of flat. It's not negative. It looks more like what I call the dolphin look, with a little closed mouth there. So it hasn't crossed negative, but it's saying that the upside could be a little limited right here. The MACD is under 80% at 78%, but the on-balance volume is showing strength, which is what you want to see if there is a new high, and that at least confirms the high. It doesn't. It's other than confirming, it doesn't tell you the future. It just says, hey, this is a good confirmation, except that the on-balance volume is right at a level where I wouldn't be surprised if it pulls back a little bit. So this is what I'm looking at. So you remember, you had a position and you were thinking about what you should do, and we were looking at certain levels that maybe you're thinking you might lighten up a little bit. Correct? Is that the way we were looking at it?
Yes, but I didn't lighten up.
You did or you didn't?
I did not.
Yes. Okay. I was hoping that you hadn't lightened up, because look how it's held the 9-period exponential moving average. From the technicals that I'm looking at right now, the next 3 sessions could see a test of $84.50 to $84. If it closes under 83.80, that's going to suggest that little wick we actually look. If I remember correctly, I don't know if we looked at the wick on that day, but this is like a Chapman wave Roman candle, and that's the low of 83.38 on the 17th. So the way I'm looking at it, the upside is getting harder and harder for it to make the upside with much higher levels. Not that it's not going higher, but it's taking its time. And I've just got a peak. I've got a leg D in the weekly now, so that's a D. Good. And I've got a D in the monthly. So this is what I'm going to say to you. Ari, you've been very patient. You've done it. You've not traded it. You have positioned yourself extremely well. What I'm going to recommend is that at this particular point, I can see a sideways. I think I said that before. I can see sideways the test of 82s. I could even see if the dollar actually starts to strengthen. I can see gold coming down a little bit more one more time. And that says it's held so well, FNV, Franco-Nevada, that it should be one of the better ones. But if it does start to break the 80, I'd say 83.50s, that whole 83 area, if it starts to break it, we might be looking at time, not so much price. So I'm going to suggest, this is just my thinking, that you keep a call, and that right here at 85.39, you might want to just take a tiny bit off. This is only my thinking. You don't have to do it. I'm just saying this. My thinking here is that you've had so much patience, you've done so well, that because it has to take 87.50 out decisively to really start another move to the upside. In other words, like another buy mode. I think that's going to be tough to do. I would not be surprised if right here at 85.39, if you just take a little bit off to give yourself a feeling of handling your positions and building a little cash position that you might want to put back later on. And then the other thing is, give me a call if you see this hit 83.75, 83.50. Let's look at it again. I'm thinking it's not going to tank. It's just going to pull back maybe 7% if it does at all. That on a worst case basis right now, because it's held so well, and the MACD in the daily and the weekly, the weekly and the monthly are still so strong. But I am thinking limited upside. So either you say, you know what, for 2 points, I'd rather see if it can go a point higher than take any money off. But my thinking here is it's going to be more difficult for it to get 2 points higher. It's not so difficult for it to get 2 points lower. And I would this is the first time I'm saying to you, I would take a little bit of, this isn't the amount that you thought you'd take off. I'm just saying, get a feel for getting something off and building up a cash position. And that way, your mentality says, I'm not beholden to Franco-Nevada. I'm controlling my position. I'm not letting it control my position. I've done well so far. I want to just reward myself a little bit. I don't know if you agree with that thinking, but that's the way it's looking price-wise. So I don't know if that's part of the plan that you would consider, but that's kind of my thinking.
I appreciate it. Thank you, Basil.
And thank you so much for calling. Let me know how you do, because this is really a very good stock so far. Thank you very much for calling, Ari.
Bye-bye.
Bye-bye. So, folks, let's just do this. Let's just go back to I had a caller from Boston, and she had gold, GOLD, Rand Gold Resources. Now, I haven't heard from her, but I'm sure she does. She listens to TFNN. Hopefully she's listening now. I've been thinking of you for quite a while. What I'd said is, when you had called me after it had that horrible candle, this is Rand Gold Resources, and it was trading down. It was at about, the low was 89.79. I think when you called, it was like at 90.78, somewhere around there. I'd said, what I would do is just take a little bit off, and then I would sort of negotiate around it, only because it's done that. And normally when something plunges like that, I'm very strict with my rules. But if it does make an H pattern, it can retest. That could be positive. So don't do anything other than some money management and take a little bit off then. She had it for quite a while. I said, let's see what happens. Well, now it's in a leg C. I love when stocks fill a gap, a big gap down on some kind of news that was on the 2nd of November, and then it fills the gap. It hasn't quite filled it yet, has it? The low of the first was 97.87. The high yesterday was 98.30. Yes, now it's filled the gap. So I hope that you have still kept a good part of your position. And what I am looking at here is that what I'm looking at in terms of downside potential, it says now you've raised the base of support on Rand Gold, and that's really important. That says, yep, it could pull back if gold starts to pull back, but and gold stocks invariably have gaps because they're overseas, they're traded overseas. So I'm not talking about that gap. That was a gap of news. These gaps are just trading gaps. But I wouldn't be surprised at 97.11 if it starts to trade towards the 96.95 area and sees and tries to retest to see what's trade. But so far, I like the action. I hope you still got your major position. Basil Chapman, Tiger, positions out, Dow's up 157.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Gone parabolic, GBTC. I had discussed this when I did my webinar about a week, just over a week ago. We actually didn't get it. If I just remembered, I had it on the list and I didn't type it into my Trader's Corner, and I missed it. I thought, I don't know if we would have got it, because I don't like to buy gap up, so I'm not sure we would have got it, but at least I would have been there. This way we're just watching, and it's gone from the area of the 8, it was really like the 870s or 900, and now it's trading at 1570, up 18% at 200, up 241 at 1,570. Bitcoin Investment Trust. This is not the real thing. This is the derivative. It's a trust, so it doesn't trade other than during market hours. I would not be dealing with this because when things turn around, you want to be trading live. So that's that. A couple of questions. JP Morgan, so XLF right now is actually showing some strength. First, oh, whoa, big strength. It didn't show this earlier, but now it's in a strong leg C to the upside. This is a good sign. So I'm not sure if the TLT is pulling back. No, TLT is up. So this is very interesting. So the financials are now joining in. Select Spider Financials. This is a good sign. So I'll do a little more about it tomorrow. Bank of America is up 65 cents to 27.24. We never got back in. We can still get back in. We'll see. So the answer there, yes, do not short. Don't even think of shorting the financials. Just wait for pullbacks. This is the way it is. Cisco. Question about that is by Microsoft, Apple. So big move. This is in leg A, B, C, leg D, and Cisco up 74.37.61, all-time high. Looks very good. I had a question about Amazon. You remember I was saying that Walmart was showing a lot of pressure, giving Amazon a lot of pressure. But Amazon is the king. Amazon's the big one. And what I said was that don't. I had a question about buying calls on Amazon. I said, wait a few days, let it pull back a little bit, which it did. I don't know if that person bought the calls, but it did spike. So Amazon is up at 279 at 1,198. I don't think it hit 2,000 today, did it? I can't see. 2,000, maybe yes, maybe no. Yes, it did. Sorry, 2,000. 1,200. It hit 1,205. So this is Basil Chapman, Tiger News Hour. I'll be back later on with Tom, and have a great day. Check out my Friday webinar a week from today, a week from Friday.
It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
David White's newsletter, The Technology